Good morning, guys. How are we all doing? So Dan from Trading with Dan here. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, and we shall head straight over to those Bitcoin 4-hour charts. So yeah, there we have it. We had the forward check, the back check, and then the paycheck trade. Obviously to the downside this time. So well, a paycheck if you were short, a reverse paycheck if you were short. But yeah, as you can see, we are basically coming down to this area. This support area we've got 52k to, we'll just call it 52k to 53k. It is yet to be seen whether this is a front run. This is a pretty strong bounce off this area, off nearly at the area. So is this a front run? Are we now going to find our way back over 55k? And then potentially, well, try and make our way to the top of the range again. That remains to be seen. I don't particularly have a bias on that. Other than I'm only really looking for sideways, as you guys say, sideways to down. And yeah, I mean, that is basically what we're getting. Do we get back up to this 57, 58? I mean, it kind of would look like if we did, we would have a good chance of getting above it if we actually were to put in a move of that sort of strength and magnitude. But yeah, but for me that does seem like the less likely scenario. But what I will say is that there are basically the stimulus checks actually hitting people's bank accounts now, and I think Biden says there's going to be 100 million of these checks in the post by Monday. So 100 million. If I just well, we'll just do it on a calculator. 100 million, which is 100. And then 1 2 3 1 2 3 6 noughts, times that by 1400, and what do we get? A very big number. So basically I believe that is maybe 1.4 billion. But yeah, that is a lot of money, to be going in the hands of people that are notorious for using that money in these markets and treating it as a casino. So yeah, the money, the cavalry is arriving. Reinforcements are here. So yeah, is this just the buy the rumor, sell the fact? Larger payout, larger sell-off, just because obviously we're coming into the news, literally into the news, buy the rumor, sell the news, whatever you want to call it. But yeah, a pullback, but don't forget those people are going to be able to buy. But yeah, is that, are they going to buy, basically buy us back up? Are they just going to support us around this level, this range? Are we just going to trade sideways? Yeah, we shall see. I mean, if we do want to just do, we do just want to do like an eye test, we can very easily just trade sideways to down in this level, as long as I believe I said as long as we realistically holding well this low here, about 43k. I mean, it gets a bit dicey if we don't hold this low as well, but that does give us room to play. So basically, if this is going to be the low of this current range, around 52,000, then yeah, that would be incredibly bullish. If this is going to be the low, about 46,000, then that is also not going to look bad, providing we do hold that as a low and we just trade sideways and build up a head of steam to break back up. Just a nice consolidation at a very high level. So yeah, lots of things longer term to think about, but I think we can safely say that we are not currently in a in a medium or short term uptrend at the moment, like obviously these were and this were. We're in sort of one of these phases now, as you can see. So obviously that phase last time, if we go to the measuring tools, that phase last time I believe was about 27%, wasn't it? About 20, depending on where you measure it from, but yeah, call it 26%. So if we kind of want to look, I mean, we can't really count this high as the level. We've got to really sort of look at this high, because this is where we are currently falling away from, 25%. 26%. Yeah, I mean, it basically brings us down to that not far off that 43,000 level. So yeah. Yeah, but to be honest, this high and this high is not too dissimilar, so it is going to basically bring us to a low that's not too dissimilar. And then if it's not too dissimilar highs and not too dissimilar lows, all we've really got is just sideways price action within a large range, haven't we? So there you go. That is what we could be happening. Obviously, things will start to get a bit disastrous if we, if we break below here, breaking below 40,000. Gonna look bad. Gonna look bad. Not much else I can say about that. Then it's going to look like long-term downside, not just short and medium-term downside. And then we can be looking at like 70 to 80% corrections. So yeah, something for us to consider and digest there in Bitcoin. Ethereum literally just bumping along the bottom here. Obviously not looking good. It needs to sort itself out. I'm guessing this is just coming down to what is going on, but at least if it's just holding this level with Bitcoin's moves, it is holding its own against Bitcoin, so only moving down the same amount, so that's not too bad. As you can see, the USD pair in finally lost this range, so our next target realistically is 1600, so $80 lower. 1600 target basically for Ethereum. Maybe we get a rally up, a back test of the 1750, get rejected and then come down, but yeah, this will pretty much get dragged around by Bitcoin. The 10-year backing off a little bit here, so we could obviously, if we look at this in the context of a daily, just look at it. We've had a pretty nice smooth move up with no real retraces. So what I kind of think could happen with this is that we could get a bit of a pullback. In this. I mean, it's hard realistically to pick a level other than the level that we got drawn in. So yeah, we could get a forward check, a back check, and a pay check here. Basically, a pullback to around basically just under the sub 1.5 level, mid 1.4s. But I believe that is just going to be, if that is happening now, starting now, is going to just be basically a relief pullback. And then before we do continue on upwards, because there is a saying in the bond market that yields will continue to rise until something breaks. So basically something is going to have to happen as a result of these yields going up for these yields to stop going up, basically. So yeah, we have come quite far quite quickly, so we could get a bit of a pullback, but that is not going to, for me, like with like 99% certainty, not going to indicate that this is basically the high and we're coming back down. It's just going to be relief rally. We are going to take this out and we are going to move up. So something's breaking. What they could be? There could be a severe stock market correction. There could be things breaking in the repo market that we have spoken about. Things in the repo market, although that's not necessarily at the moment the repo market broke, and that's just obviously we can see people are trying to short this, as in go long the yield, short the actual bond price. So people trying to long this, and obviously it's going up. But yeah, we could see a bit of a retracement, and then we're going to see onwards and upwards. But also, when it brings us to what people's views are on this, people are not panicking. The stock market is still doing okay, as you can see. People are not panicking because of they obviously are expecting inflation to increase with the reopenings, and obviously the base effects as well. Obviously March and April last year, base effects basically mean when you take like the number based off the 12-month average, the 1-year average, you're taking into account data from March and April last year. At the moment, so that data is going to be basically March and April's data is going to be taken out of the 12 of the inflation calculation number, and then obviously those months were obviously massively deflationary, so that is pinning inflation lower. So when that basically that base effect is gone, it basically is out of the calculation, those 2 months, March and April, then that means that inflation is just going to be printing higher, and we all know that is coming anyway, so that isn't going to spook the market. So that is not going to spook the market. So at what point is basically rising bond yields going to spook the market? Basically probably into next half of the year, and the final quarter, when basically all the dust has kind of settled, the base effects are obviously clearly long and done. We're getting new data points, and we're seeing that potentially inflation is there and is real, and it is inflation. It isn't just inflation because of a reopening, and it isn't just an increase in the print because of the base effects. And at that point, my friends, is when we then may start to get a panicking market, obviously in the face of yields still rising, and then that may be the thing that breaks. So there you go. At that point though, I'd fully expect yields to be I'd expect yields to be in this basically anywhere up to 3%. So yeah, basically between the 2.5 and 3%, I would expect yields to be there by the end of the year, and that will be the point where something will break. That is pretty much my view on this. But like I said, there is bond yields won't just go up, form a top, start to come back down again. Nothing really have happened. Nothing really have broken, changed, or nothing. There'd be no real catalyst and be like, oh, fair enough. It was just a sharp move back up in rates from 0.5% to 1.75%. It was just a pullback, bro, and we're going back down. That's not how bond markets work. We're gonna with something. This is just gonna keep going up. Because don't forget, people. A lot of this moved down. A lot of this moved down in bonds was because the Fed was buying, and then so people buying bonds were basically speculating on lower prices of bonds, and then obviously lower yields on the bond, because the Fed was buying, and therefore higher prices. So they were buying them for basically the appreciation in value of the bond rather than the actual income. So if bond prices are not basically rising in price, then all those people and all that speculative money is therefore not going to be buying bonds anymore, because they're not going to be able to sell them for a profit. Therefore, they're not going to buy them. So obviously, and this is partly why trends reverse in anything really. Basically, people turn from buyers to sellers. So people, or buyers to not buyers, or if you already bought it, to sellers. But yeah, people turning from buyer to seller. But yeah, like I said, there isn't the incentive there for people to basically buy bonds thinking the Fed's going to basically drive them down, because they can kind of see the Fed's basically struggling with what's going on at the moment. So they potentially don't want to take that risk and leverage up that trade. Don't forget, these guys leverage up these trades to force these markets down even more. And you could argue they're leveraging up this short trade, but then you could also argue they're maybe not leveraging up this short trade, because actually the treasury is in short supply. So that's why they're having to force repo market yields negative to actually get the treasuries to sell, just because treasuries are in short supply, not because they're basically massively over leveraging and doing so much of the trade. So yeah, anyway, there we go. Let's look at the DXY also. DXY, as you can see, this is having a nice move up here still. Again, yeah, looking good. Looking good for potential move up now. I mean, this is basically the horizontal level. Take this out, and we'll also put in our previous high. Also, will obviously be a level of importance, but not as important. So it'll just be a shorter line. But yeah, this is looking like it is not going to break below this level at this present time, and it's got a better chance of breaking above these horizontals and finding our way into basically this fun zone here, where I would expect at some point in here, it's got a good chance of getting resisted and coming down, but it's also going to look very much like this is the low, this is the macro low, and that is going to basically give people confidence to buy and try and push us through this level. So yeah, we are at a well, like I said, we are an important level in the dollar, where this is the level that I've been talking about for ages, basically the low 92s. Low 92s where we have to get rejected and come back down, and if we don't, then we have to potentially turn to a macro dollar bull thesis, which is not ideal for lots of things. Bitcoin dominance as well, low, there we go, low for what it's worth. What is it? FWITW, for what it's worth. This chart, as much as you want to read into it, but yeah, it is looking weak. So maybe it's all the Bitcoin longs, other people that are selling, and not so much the altcoin longs. But yeah, so one final look at the stochastics. This video's gone on a bit longer than normal, hasn't it? Only marginally. Yeah, 4 hour pretty deep here. 4 hour is pretty deep. So this could potentially turn around and give us a bit of a pullback here. I mean, yeah, could get us back up to this 55k level pretty well. We're not far off it now anyway. Very easily. Could basically bust us back into this zone. And then that would actually not start to look too bad if we get back above into here. But that is only a 4 hour. What are our other time frames telling us? Because I don't suspect they are going to, well, to be honest, the 4 hour is still pointing down anyway. It's not turned up yet anyway, so we are preempting this to turn back up anyway. And if price action comes back down, it's clearly not going to. But yeah, not going to straight away anyway. 10 year though is still coming down, but got a bit of a kink in it. 12 year, 10 year and 12 year, because we're looking at bonds. 10 hour and 12 hour. Yeah, 12 hour coming down, taking out of this low is going to look for more downside. Daily dive in, 2 day down and turning down, 3 day down, turn down, 5 day bit undecided, weekly bit undecided, bi-weekly and monthly. We don't look into those too much, but yeah, I mean, it's not looking too good stochastic wise. So like I said, it's going to be a case of do 100 million stimmy checks find their way into Bitcoin, in which case we will be fine. Or are we actually going to be just testing out more downside? Are we going to play within this wider range? Are we going to find a base maybe even around 46k? Maybe. Lots of if buts and maybes here, because it's not obviously certain that we put in this medium term high here, but it's kind of looking like it. So then it's the case, where do we put in a medium term bottom? We can only really judge that obviously as time goes by on a basically medium term time frame. We can't really say right now where it's going to be. It's just going to be a case of playing it level by level as we go. So yeah, that is it, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.